The Market Masters series, in which we get you a special conversation with Shankar Sharma. The market veteran reiterates his confidence in the India story, even as markets hit record highs. In conversation with my colleague Sakshi Batra, he says he continues to believe that India is the best market to invest in for the long term, even as he sees general elections as a near-term headwind to the ongoing bull run. Listen in.
We have seen that take place over the last 4-5 odd months with the kind of stupendous rally in several pockets like defense, railways, shipbuilders, PSU banks as well. How would you really look at the run-up we've seen already in these pockets? What would you advise investors who've had the better part of the pie?
College, obviously we were all, young boys chasing all the young girls, and, the operating, you've been through college, you know how it happens, right? The point was this, and that's what I tweeted, that one never got depressed if you missed out on this girl, and she got hitched to somebody else, or she found somebody else better. The operative philosophy is, kya farak padta hai, boss? We are still in the game. We will get the next one. Okay? Just stay in the game. Keep the trying on. Don't give up. Don't get depressed because you missed PSU banks or you missed the most beautiful girl on the campus. There will be many beautiful, or if you're a girl and looking for a guy, it works both ways. So the same philosophy works in the stock market. If you missed one sector of PSU banks or different, that's okay. There are many. It's an endless journey of great opportunities. India is a land of opportunities. So, don't get depressed. And that's a good question, because most people are fixated on what they missed rather than what lies ahead.
Yeah. That's very true.
Even in cricket, to give you another example, which is in cricket, if you see great batsmen, if they miss out on a ball which was a full toss and they should have hit it to the boundary or something, they miss out, they don't regret it because they know they will get another similar delivery. The bad ones regret that, and that they are clenching their fist and they are shaking their head. The good ones say, okay, it's okay. I missed out, but it doesn't mean the end of the world. There is another ball coming and maybe I'll get another, full toss and I'll hit it to the fence. That's the mental model you must have. FOMO is the worst enemy in life. Forget stock markets.
Even at record highs, would you stick to that statement?
100%. I'm extremely bullish on India. And by the way, I've been bullish on India for decades because, I think India has the perfect ingredient for stock market investing. It has a vibrant equity culture. It has a fantastic market structure given, all the improvements, electronic trading, DMAT, quicker settlements. So many good things have happened over the since my career started in the 80s. It's unthinkable where we have reached from where we started. And all of that is thanks to the government's policies across various governments, across regulatory regimes. So India has got a vibrant culture, great stock market structure, and 10,000 companies to choose from. It's amazing. You are spoiled for choice. Literally, it's like a buffet table that never stops giving. So given that, you have to be an optimist on Indian stock markets, and I am one. All I'm saying is it doesn't mean that every year and every quarter you're going to make eye-popping returns. That is the nature of equity returns.
How do you manage to create alpha even when the markets are at record highs? I think that is also something that, is a challenge for you also as a fund manager, that every time the markets are at record highs, you would want to beat your previous kind of returns that you have made.
So, yes, that's a challenge for sure. The way as professional investors, we can overcome the challenges. First of all, take money off the table. 20-25% is a reasonable number if you've doubled your money. That cash you should not get into a big rush to deploy.
Yeah.
In markets, particularly when you're managing your own money, you have no pressure to deploy capital immediately. Unlike when you're managing money for other investors, okay, you cannot sit on cash because investors give you money for investing, not to sit on cash.
Yes.
All right. So the point is this, that if you're managing your own money, it is prudent to take money off the table, and also prudent not to just go rushing looking for something else to buy. It is not wise. Wait, markets will give you opportunities, but they will give opportunities which you can capitalize only if you have cash in the bank. Otherwise, just they will come and pass you by. So
True.
don't be in a flaming rush to deploy that 25% profit taken off the table. Wait it out. Market will give you amazing opportunities. Have patience. You are not a professional money manager who has to immediately go back into all the stocks that is there on the second list after the first list in which he exited from.
Watch the full exclusive interview on our social media and YouTube channel, Business Today.